We have Mehraboon Irani who joins us on the show. Well, Mehraboon, we want to talk to you about a lot of stocks, but I think the one that's clearly shown a good bounce today has been Reliance Industries. Underperformer in this month in comparison to the Nifty, but that's come back, today, and that's one of the key reasons why the Nifty is not falling apart. Your take on the stock at these levels?
I would be a buyer around the present price. I think, Nigel, let's be very honest and state that before this windfall gains tax came or was proposed by the government, which came as a surprise, definitely yes. I think how many of us were not ready to state that Reliance is heading towards a 3,000 rupees price. The stock came down sharply, is consolidating around the current levels, and if one doesn't bother too much about maybe a 50, 100 rupees further fall from here, I think this could be a good entry point for Reliance. Let's understand one thing, that the gross refining margins are going to be much higher than what possibly the street is building into their estimates at the moment. So despite the windfall gain tax, I personally believe that there should not be too much of impact, negative impact on the EBITDA of Reliance for 2022-23. And that makes me feel that the present level of around 2,400, 450 should be a good entry point. And we also know that Reliance is working on the succession plans. We could also have further noise, I would say further news also as we go ahead, as far as a possible demerger which could happen. It's just a guess. It's just a guess on my part. I'm not privy to any information, but all this ultimately should be positive triggers for the stock. So at 2,600, when people were thinking of buying into Reliance, a fall of around 7, 8, 9% from that level, I think certainly qualifies as a good opportunity for a little longer term investment, because I also personally believe that we could see a 3,000 rupees for the stock before December 2022.
Okay, Mehraboon, you know what? You just came here and we got the news on this GOM. It's inconclusive as of now, so I think they'll meet again, perhaps in August maybe. So it leaves the field a bit open for Delta Corp to react to earnings and more than anything else. But I know this is your #1 favorite stock. So tell us, I mean, it's seen a very brutal and sharp correction, and a lot of influential investors have also exited. You think it's back in the buy zone?
Well, Delta, definitely, I've personally invested in the stock for over 20 years now, and I think, yes, it is definitely a part of my one of my major holdings, so a clear disclosure on that particular front. Coming back to your question, as far as the GOM goes, I think my personal reading is that if the GOM decides, or the GST Council decides to go back to the drawing board, I would say that somewhere, I would like to believe that they will be more reasonable with the way they are planning to tax casinos. So I would look at it a little bit positively, because the market has already discounted the fact that they are going to be taxed heavily. Point number 2 is that the factor that should rule, as far as my observation goes, is it's a clear cash cow for the government. The industry is possibly moving in the right direction right now. Revenues for the government should continue to grow up, and why should somebody try and abort the complete business plans of most of these companies, including companies in the gaming sector? So there are a whole lot of people like me, like you, Anuj, who would be going with their families to a casino just for sheer entertainment. Now, if you start taxing us at the highest possible level without understanding that we also go over there to indulge a little bit on gambling, but also have a little bit of entertainment for us, as a different feel completely when you go to a Goa, then why should somebody come in our way? So I personally believe that they will be reasonable with the casino sector. That's my personal belief. Coming back to the numbers, I think, which was expected this evening, I think somewhere March quarter was a slight disappointment. The numbers were slightly below expectations, and let's keep our fingers crossed that the numbers will be much better. Coming to the fact that the stock has come off completely, come off sharply from 240, 250 levels to the present 175 odd levels. This has got to do with the fact, to some extent definitely, with the fact that a Pied Piper of the market, a leading investor, has exited the stock for reasons certainly known to him. I personally, whatever I am privy of, I don't think there is any negative news as far as Delta Corp goes. And when a big investor sells and lots of investors that followed him, it's more obvious that quite a few of the retail investors also will come out of the stock. But what is important is that some of the shares got parked with HDFC Mutual Fund, and some other big investors equally of repute as the big bull, I think they also have added to the holdings. So I would certainly look at Delta as a possible buying opportunity, despite the fact that we really ultimately don't know what the government does what the GOM does,
Yes.
because this is the time where we all know that the government is strapped of funds and they can just press the button and possibly kill the industry, certainly at least in the short term.
Yes.
But Indians are some of the biggest gamblers in the world after the Chinese. So I don't think ultimately it's going to make too much of a difference. Sentiment hit can happen.
Okay, all right. Got that. Mehraboon, I want to know your view on NMDC as well. But first up, let's just run our viewers and refresh the news that has come in today. Earlier today, we told you here that there's likely to be a price cut by NMDC to the tune of around 500 rupees per ton. NMDC has officially announced that on the exchanges a couple of hours ago. Now, with this price cut of around 500 rupees per ton, well, prices are down by 35 to around 45% since April till date. That's on lumps as well as fines. The second factor that's playing out is that NMDC holds 5% weightage on the Nifty CPSC index. Now, it's going to be excluded from that index because it's going to be undergoing the demerger. So that's why there could be some outflows. And IFL, they have quantified that between 85 to around $95 million. The third factor is Kotak. Well, they have come out with a note. They say that the margin headwinds are mostly in the price. Fair value, they've cut to 105 from around 110 odd. And they have changed their rating from a sell to a reduce. So the stock is down close to around 5% odd. Mehraboon, at around 100, 104 rupees odd on NMDC. What would your view be out there? Maybe China reopens, maybe there's a stimulus package that comes in there. Hopefully, there is some restrictions on the steel majors on the export duty that's pulled back. That's what could help the offtake. How would you play the stock at these levels, or would you avoid it?
But this is not the first time that they have cut the prices. You very well know that, Nigel. I think the price cuts are keeping on happening. Also, largely the consensus is that US and a large part of Europe is possibly moving towards a recession. How mild it is, we really don't know ultimately. But the question is the demand part. So the outlook honestly is not very positive. I think the biggest positive, not only for NMDC, but for most metal, ferrous, non-ferrous, is the price at which the stocks are come. Do you go and sell off the stock at the present level? If the answer is no, somewhere along the line there are reasons to believe that the stock ultimately one fine day will look higher than will be higher than where it is today. So where there are no compelling reasons to recommend the stock, the price at which it is right now, I would say slight sympathetic view if an investor takes and buys into it and ready to lose a little bit of money, will ultimately end up making money. But there are better options according to me in the ferrous and non-ferrous space than NMDC. So certainly not a recommendation from my side.
All right, NMDC there, the view coming in from Mehraboon. Now, Star Health is a stock that we've been highlighting on the way down quite extensively, but it's made a bit of a turn. It's up about 4%. It was up 8 earlier, and I think it's up some 23-24% from its recent lows as well. Yash is here with a quick look at what's going on here. Yash, over to you.
Prashant, you've set the pretext. The stock Star Health Insurance is buzzing in today's trading session. In fact, the stock is up about 24% in the last 6 trading sessions itself. But still, because of the down move that we saw, which you mentioned, the stock is down about 35% from its IPO price. Now, what triggered the up move? Credit Suisse on July 7th initiated coverage on the stock with an outperform rating and a target price of 600 rupees. You see the stock inching closer to that target price. Credit Suisse also said that the fall in the stock price was after media reports which suggested that life insurance companies could be given entry into the health insurance space. But at the same time, they said that at those levels, the low levels of 480 odd on the stock, the bad news is in the price and the risk reward has turned. And in fact, they went on to say that the stock has the potential to gain another 20% from those levels of about 480, 490. Now the concern which still remains, Star Health Insurance has underperformed the standalone health insurance industry growth in the last 3 months. April, May, June, all 3 months, it's been half of the industry average growth. But on the positive side, Credit Suisse has something positive to offer here as well. They say that FY23, they expect the premium growth for Star Health Insurance to pick up. They see recovery in motor premiums driven by normalization of automobile sales and moderation as far as the prices are concerned. So, of course, what Credit Suisse sees is that negatives are in the price and there are positives to look forward to, and hence the stock buzzing in today's trading session.
Mehraboon, any thoughts? Star Health?
I think as a company, it's 100% yes, one of the possibly the largest standalone insurer engaged in health insurance. We all know that. The stock has underperformed. But I would put it this way, Prashant, that let's be very honest, over the last 3-4 years, including me, we all have stated as far as the insurance business goes and the insurance stocks goes, they're great compounders, just buy and forget. So looking at the way the stocks of most of these companies, including the bigger names like HDFC Life also, if you take, or SBI Life also take, they've just done nothing much as far as stock price performance goes. After the way Star has possibly underperformed the others, I think at the present level, I think it would not be a bad entry point. But again, I state, the way people are looking at the insurance business, the overnight we make money, it is not like that. This is a business which will keep on growing. Good players like Star will be there in the market and will do well. So certainly it qualifies at the present level as a decent entry point for a longer term investment, certainly not for short term gains.
Okay, fair enough. Well, Mehraboon, stay on. We need to take a break. As we do that, the market is still trying to negotiate the lower levels. Infosys clearly is putting a lot of pressure on the market. I mean, because after TCS, there's been a very swift decline in Infosys. In fact, Infosys decline is now more than even TCS. And it's now within 5% of 52-week low. So there's quite a bit of pressure on account of Infosys that we have seen today, and HCL Tech as well is also moving a bit lower. So there are a couple of stocks making a move. TCS itself, by the way, has moved to low point of the day, and stocks like Hindustan Unilever also moving lower. So all of that is putting quite a bit of pressure on the market. On the other hand, Reliance is trying to bat for the bulls once again, and it's got some support from the metal stocks which are trying to bounce back. We'll take a break. Up next, Jay Bala of CashTheChaos.com will be joining us to discuss